Coming up on Market to Market, the Senate Agriculture Committee greenlights its version of the Farm Bill. Fighting wildfires with fewer dollars and more ground to cover. And market analysis with Dan Huber next.
Wherever your operation takes you, or who you share it with, we'll be where we've been all along. With you from the word go. Proud sponsor of Market to Market.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it. This is the Friday, June 15 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Delaney Howell. On Friday, President Trump enacted his long-threatened $50 billion Chinese tariff package. The effect of the rumor was already seen in a number of economic indexes. The Producer Price Index rose 0.5% last month. When price swings from food and energy are taken out, core PPI rose 0.1%. Prices paid by consumers increased in May, rising 0.2%. Core CPI grew the same amount. As expected, the Fed raised key interest rates for the second time this year, bumping up that amount charged to banks 0.25 point. Since the 2014 Farm Bill was enacted, the drought-fueled farm income of the early teens has declined and a relatively low number of bankruptcies has risen. Along with unresolved trade negotiations, rural America is left searching for some sense of stability. That safe harbor for farmers and ranchers may well be the Farm Bill. Work by the upper chamber on the measure was less contentious than in the House. Paul Yeager has more.
Seeing a quorum, I call this meeting of the committee to order.
The Senate Agriculture Committee spent part of the week marking up their version of the 2018 Farm Bill. Members waded through 12 titles and 66 amendments for the industry that provides 16 million jobs in this country.
The absolute requirement for this committee is to provide farmers, ranchers, growers, and everyone within the agriculture and food value chain certainty and predictability.
Robert says he heard producers tell him crop insurance was priority one in new legislation.
Everyone in this committee, the whole Senate even, has heard me talk about the importance of the Great Lakes and the fragility of Lake Erie.
ARC did not receive the changes needed to make this program an effective safety net in the next Farm Bill.
Any problem, whether it's a drought in California, whether it's nuclear fallout coming across from Japan, it literally changes whether we can produce wholesome food in that part of the country.
With the uncertainty on trade and on immigration in my state, and with commodity prices where they are, our farmers and ranchers desperately need this Farm Bill.
Active management enhances public safety by reducing the threat of wildfire.
Individual senators spoke about important topics in their home states and how the Farm Bill will improve life in rural America through improvements in the conservation, food, and nutrition titles.
Rural communities across Vermont and every corner of America, represented in every single state here, will directly benefit from this bill.
Thank you.
Senate Majority Leader Mitch McConnell serves on the committee and touted the benefits of expanding assistance for hemp, a replacement crop for former tobacco farmers in his home state.
Younger farmers in my state are particularly interested in going in this direction. All the people in rural Kentucky who sort of grew up with tobacco are hoping that this will be really something.
The Senate committee has worked in a bipartisan manner on the measure.
Good farm policy benefits every single American every single day because we have the highest quality, lowest cost food supply in the world.
On this vote, the yeas are 198, the nays are 213. The bill does not pass.
The House failed to pass their version of the Farm Bill as no Democrat and even some Republicans cited concerns over immigration and food assistance aspects of the bill. Nutrition assistance has been less thorny in the Senate's version, but there was still some tension among committee members.
However, the bill is not perfect. We must do more to help SNAP recipients rise up out of poverty. The U.S. economy is booming right now. For the first time on record, the number of job openings exceeds the number of Americans looking for work. We must seize this opportunity to help folks become self-sufficient.
Senator Grassley.
Senator Charles Grassley cast the lone dissenting vote. The Iowa Republican wants stronger language putting a cap on the amount of money farmers can get from the farm program. Grassley is unsure how he'll vote in the full Senate version, but has a strong recollection of the last go-round when his amendment advanced both chambers but didn't make it through conference committee.
They obliterated it. In other words, I got screwed in conference, and consequently, that's why I voted against the 2014 Farm Bill.
The ayes are 20 and the noes are 1.
For Market to Market, I'm Paul Yeager.
The Senate Farm Bill contains a forestry title that pays for, among other things, reducing the fuel that threatens towns, local industry, and lives. Earlier this year, Congress approved the Wildfire Disaster Funding Act, which was designed to prevent the USDA's fire service from having to raid non-fire programs to pay for firefighting. Colleen Bradford-Krantz has more in our cover story.
8,500 firefighters from around the country worked in December of 2017 to battle Southern California's now infamous Thomas Fire. The blaze devastated nearly 282,000 acres to become the state's largest wildfire in modern history. Talbot Hayes, a Forest Service District Fire Management Officer from Alpine, California, traveled 200 miles north to join those battling the massive fire, which ultimately destroyed more than 1,000 homes and businesses, as well as taking 2 lives. A month later, Hayes returned home and continued his forest management work to simplify battling wildfires in his assigned district inside the Cleveland National Forest.
The time to fight tomorrow's fire is in the winter through prescribed burning and fuels management practices.
The almost automatic response to wildfires for decades had been to put them out immediately. Greater awareness of the positive and rejuvenating effects of natural fires in forest and prairie regions brought about a shift in strategies to allow fires in more remote areas of the country to burn longer. But in heavily populated regions where lives and buildings are at risk, Hayes says there are few such opportunities to just let it burn.
Well, down here in Southern California, the strategies pretty much stayed the same, and we try to suppress all fires due to the values at risk. The amount of people that live down here, the infrastructure in the area, doesn't allow to try to manage a fire. It's more full suppression. There are other regions that have a lot more wilderness and areas that are further away from values at risk, communities, and those areas can have slightly different strategies.
The 2018 fire season is expected to be a tough one, as many regions are already tinder dry. New Mexico and Colorado have already faced large catastrophic wildfires that broke out before the traditional start of the fire season.
We had engines that were sent to Colorado in March this year, which is very uncommon for Colorado to be having fires in March. We're not getting as much rain as we're used to getting. We're in a dry spell. Our local mountains aren't getting near the snowpack that they used to receive. And so the vegetation is a lot drier. The reservoirs don't have as much water. All this contributes to a busier, longer, more devastating fire season.
According to Hayes, most wildfires in Southern California are started by humans rather than by lightning. A spark from a dragging trailer chain or a mower hitting a rock may start a grass fire in the heat of summer.
Just be safe.
Jay Eyre, Cleveland National Forest campground host at Mile 26 on the Pacific Crest Trail, says hikers need to be aware of fire conditions and comply with fire prevention rules along the route. Campfires are prohibited outside designated campgrounds, and permits are required to use certain types of camp stoves along the 2,659-mile trail that runs from Mexico to just over the Canadian border.
They need to stop immediately if there's fire in the area.
Ayer, a retired school teacher from Montana, says his home state also had a rough fire season last year.
Last year was a big fire in western Montana mainly. A lot of Montana is in high fire danger just because of the climate change and the warm temperatures, lower snow levels we're seeing. And a few years ago there was a huge infest of bark beetles, so there's a lot of dead and down trees that are creating a lot of fuel to burn in Montana.
It's those kind of dead and downed trees, as well as forest undergrowth, that are particularly concerning for Hayes and his crews. Their answer is to cut and mow underbrush, create fire breaks, and use prescribed burns in certain high-risk areas.
We try to treat between 4,000 and 5,000 acres every winter through fuels management. Good fires do prevent bad fires.
Community defense breaks are typically 300-foot wide bands that create a barrier between the national forest and communities on its edge. It takes a crew of 20 several days to cut and gather the brush in these defense breaks. But Hayes says it increases the odds for successfully protecting a town if a wildfire reaches the area.
We try to cut out a lot of the vegetation, especially the dead vegetation and the more flammable vegetation, and in order to just reduce the intensity of the fire as it comes into the fuel break area to give us a better chance of actually stopping the fire.
The locations for prescribed burns are selected based on how much wood and vegetation, aka fuel, is present, as well as how long the area has gone without a fire. The hope is that taking away a portion of the fuel will reduce the intensity of any wildfires that do occur.
This side of the hand line that we're standing on has never been treated. It's never been prescribed burned or thinned in any way. And you can see the heavy accumulation of ground fuels. And you can see how devastating a wildfire in the summer would be if it were to start in this area. Now this side over here, this area was thinned, it was broadcast burned. If there were to be a wildfire start in this area, the fire would be very low intensity. We'd be able to get in here and keep the fire smaller.
The federal government reported it spent a record $2.9 billion on suppressing fires in 2017. And the outlook for the current year is bleak, as many regions are expected to become dangerously dry. Firefighters will continue their work to reduce the size of the fires that will inevitably happen this year.
It's not if, it's when we get the next fire.
For Market to Market, I'm Colleen Bradford Krantz.
Next, the Market to Market report.
The trade was dominated by tariffs this week. The president's move triggered a date certain of July 6th for the first round of Chinese counter tariffs, many on agricultural products. For the week, July wheat dropped 21 cents while the nearby corn contract plunged 17 cents. Chinese tariff retaliation overshadowed the soy complex, sending the July soybean contract into a tailspin, nose-diving 64 cents. July meal fell $18.90 per ton. In the softs, December cotton ended its rally, shrinking $5.09 per hundredweight. Over in the dairy parlor, July Class 3 milk futures lost 62 cents. The livestock sector finished mixed as the August cattle contract shed $1. August feeders put on 70 cents, and the July lean hog contract moved up $1.12. In the currency markets, the U.S. dollar index skyrocketed 132 ticks. Crude oil lost 68 cents per barrel. COMEX gold melted $24.20 per ounce, and the Goldman Sachs Commodity Index dropped more than 13 points to settle at 463.30. Joining us now to offer insight on these and other trends is one of our regular market analysts, Dan Huber. Dan, welcome back.
Thank you very much. Always a pleasure.
Always a pleasure to have you, Dan. And we're going to take a Facebook question off the top here. And of course, folks, you can send in your social media questions each week to get aired on the show. Dan, we've got a question here from Chad in Dunbar, Nebraska. Okay. Do the grain markets have a chance to regain what they've lost?
Well, certainly we always have a chance, but I think right now we've kind of beat things down a little bit artificially low. I mean, markets are trying to over-anticipate worst case scenario if these trade tariffs really came into being. And even what was announced today, I mean, keep in perspective, they are set to take effect on July 6th. Mm-hmm. So it does leave a little room for negotiation, and certainly I don't think China wants to get any worse of a trade war, so hopefully there's a little cooler heads prevail over the next few days. So, but realistically, it's going to take some time to develop demand once again, particularly in the beans. I mean, we've really seen a lack of demand, particularly from that Far East sector, China and specifically. And, so really would say we need a weather issue. Right now there doesn't seem to be any weather issues outside of what's happening in Texas into the southern plains.
Affecting some of those wheat acres.
Wheat and the cotton people, but boy, for the corn and soybean belt right now, we have a pretty favorable outlook. So until we can see something get a little scare there, it's going to be tough to think we're going to get back to levels that we were here even 3 weeks ago.
Okay. So. And I wanted to touch on something really quick here as we talk about tariffs. In your newsletter this week, and I want to make sure I get the quote right, you said, if it actually comes to fruition, what is left to fret about? It's now fully factored into the price structure, and you were referencing the tariffs there. How do you know that this has already been factored into the markets at this point?
Well, one, it's not like it was necessarily a surprise this week. We've really been talking about this since March, and we've had several waves of kind of selling, washing people out of there. Certainly we can't guarantee that it's, that this was the last of it. It's the story we're going to hear about it. But on the same token, you can only beat a story for so long. You can only take demand down so far. I mean, that's still on a worldwide basis. People still have to have product. So I think psychologically the market's probably pushed a little bit too far, just in kind of a panic mode. As I commented this morning, I think we have a new phrase to use in the commodity market, which is tariff trade terror. So it's just kind of a terrorized situation, but maybe we've moved beyond the worst of it here at this point.
Well, certainly I think producers sitting at home are hoping for that. Let's talk about wheat. Are there any price indicators that you're watching to signal the market to go back or go lower into July wheat?
Well, certainly the wheat market is kind of the exception to the rule when it comes to the grain soy complex at this point. And now the reaction lower this week, it didn't really necessarily turn the trend down. But, that said, it's kind of pushing us on the border. You've got July wheat back towards the $5 area. Wouldn't take much of a push below $5, and I think you'll start to panic longs a little bit. In this market, we know there's significant damage done to the U.S. wheat crop. I mean, we're certainly not going to have a robust crop here by any stretch of the imagination. You've been actually worldwide been hearing a lot of the Soviets, the Ukraine, Europe. Everybody's been ratcheting down their production estimates just little by little. So, if anything, we're seeing the world wheat numbers start to contract. That generally means steady to higher prices. So certainly wheat could go through a correction over the short term. I don't think it's going to be the kind of wipeout that we witnessed over the soybean market and to a lesser extent in the corn market.
Okay, well, I want to get to more wheat discussion, which you can find in our Market Plus section at iptv.org/MTOM, but that's all the time we have right now for it. Let's talk about corn. New crop corn, that's of course on a lot of producers' minds.
Certainly.
With the current high in for December at 429.5, is that going to be the high for the year?
I think at this point, probably pretty good probability. I mean, the only thing that would really change that would be a very, very serious weather issue. Not that could materialize, but I mean, we're getting a little bit late in the game to really get something that serious there. That said, I don't know if we have a lot of downside potential yet either. We've really returned, we've actually taken back about 50% of the rally we've seen over the last year, maybe just a little bit more than that, but we've really returned to levels that used to be resistance. If we went back to the fourth quarter of last year, this was a price range that we were having a difficult time moving above. I think it should turn around and find support there. And the reality of the corn market is that at 88 million acres, we just aren't going to produce an excess amount of crop. We already are looking at a reduction in domestic ending stocks, and in the world ending stocks an even greater percentage-wise reduction. So I think that really kind of limits the amount of downside pressure there. But boy, to get us moving back in the other direction, we need a little weather stimulus to come around to help us out there. So.
And when you look at weather issues, is it the same story in the soybean market? I think we put in a low in June last year, June 23rd. Do you expect us to follow that same pattern unless we have a weather issue?
I wouldn't be surprised. Again, I guess the question then is how much can you really rebound? I mean, if it's going to come, it's probably going to be via the help of soybean meal and demand in the meal. You know, interestingly enough, I was looking at the bean market this morning, returning to the $9 level, which is exactly where we were a year ago at this point in time. But if you look over the last 3.5, almost 4 years, 169 weeks, we have only spent a total of 29 weeks below $9. I mean, very limited amount of time here. So that it does seem to be a value area on the soybean market. Yes, I'd like to think we're going to stem the decline, but here again, we need a stimulus to bring us back out. We could easily see, yes, technical rebounds, but unless we see a real resurgence in the demand in the meal side, or of course a weather issue maybe later in July or August, the upside is going to be limited for now.
If I'm sitting on some old crop beans, should I be looking to sell them now, or do you think that they'll get a corrective bounce back up?
Tough. I mean, if you've sat on them this long, it's going to be a little bit taxing to try to wait for that bounce. But if I was in that situation, yes, I'd probably sit tight and see if we couldn't get a rebound before I'd price them. So.
Okay, let's move on to the livestock markets. With futures at a $10 approximately cash discount to cash, or at a discount to cash, is this market signaling further strength or further lower cash prices?
I really think the hog market in particular right now really looks to be turning the corner. Now, 2 days ago, we really had pushed through some resistance that has held us back here for the last 30 to 45 days. You're starting to see some of the spreads between the various cash markets narrow up in that hog market, which I think is indicative that I don't think it's ever truly been reflected some of the health issues that we witnessed over the winter months. Now that's finally showing up here in the slaughter levels, and I think that is really what's kind of lifting that hog market out of there. Psychologically, absolutely, we were beat down thinking that these tariffs are really going to make a big difference in the trade. Not that they couldn't be harming, but I think it's been more psychological than anything at this point. We're still looking at 9% increase in exports on hogs this year. We're up about 12% on cattle. So it's the demand has been there. So we just need to kind of move beyond this concern that we're not going to be able to get our product out of this country and maybe start focusing more on the numbers. So.
Are you concerned about boxed beef values? I think they've fallen to the lowest levels here in quite a while.
I was going to say, I should have moved right into cattle. Cattle, a little bit different situation. Yes, we have plenty of cattle on feed. Certainly the demand is not quite there. The numbers don't seem to have any issues being tightening as we move ahead. So it may be a little bit tougher road to move the cattle out of these levels without seeing a great stimulus and moving beef somewhere out of this country. And of course, you have the other caveat there is with the dollar now pushing the new highs for the year, right. Certainly doesn't help out that cause either. So it's a lot of headwinds in the cattle market, especially.
With that said about the dollar, do you expect that to affect just exports in general?
When you and granted, it's difficult to look at a one-to-one relationship. I mean, just because the dollar went higher, that doesn't mean corn exports are going to suffer, or necessarily even cattle or hogs. That said, it does psychologically impact commodities as a whole. And if you look at them over a very long-term perspective, they seem to have an inverse relationship. So yes, if there's demand for any specific commodity, sure, that's going to remain there, but they might be hunting around just a little bit more onto where's the best price going to be. Mm-hmm. There's probably one of the good things on the soybeans right now is we have beat it down to where we're absolutely competitive versus South America again. So that could help out stimulate a little more demand in that market. So, of course, in the livestock trade, not a lot of other avenues to go to. So particularly for the hogs. So again, that's where I'm a little more optimistic on seeing some extra business in the hogs right now.
Absolutely. And speaking of hogs, July hogs closed at their highest level since Wednesday, since February 27th. What happened there?
And again, just what I touched on a little bit earlier, I think we are finally starting to see a few less numbers coming in certain select markets than was anticipated. Probably just was never really reflected, like I say, some of the issues there were with health over the winter months and the death loss that was out there. So between that and nice summer demand as we move through further into the barbecue season, I think it's kind of lifted them up. So again, from a technical side, about a week and a half ago, the hog market just really started to act like we had a change at foot, and it looks like that kind of came to fruition this week.
Absolutely. Absolutely. I think to tie this all together here, if I'm a livestock producer, an end user, should I be looking to lock in my feed needs now? And if so, how long out are you looking to lock them in?
You know, certainly, of course, you know, we are in the feed and livestock industry, so that's something we've discussed pretty intently here this week. And yes, I mean, we did with the breakdown we saw yesterday and today, you know, we did start looking at locking in both corn needs and soybean meal needs as we move out between here in the fall. So, you know, certainly you don't go into both feet necessarily, but, you know, we think it was time to kind of start tipping into the water and starting taking a little protection in there. So.
All right, definitely looking to take some protection. Dan Huber, thank you so much for your time today.
Certainly, my pleasure.
All right. Well, that wraps up the broadcast portion of Market to Market, but we will keep the conversation going on Market Plus, where we'll answer more of your questions. You can find it on our website at iptv.org/MTOM. Check out our YouTube channel as well. Tell everyone you've clicked subscribe at youtube.com/Market to Market. Join us again next week when we explore how one creamery is cashing in on its high-quality dairy fat. So until then, thanks for watching. I'm Delaney Howell. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content.
Wherever your operation takes you, or who you share it with, we'll be where we've been all along. With you from the word go. Proud sponsor of Market to Market.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it.